Welcome to this webinar, Crop Insurance for Specialty, Organic, and Transitional Producers. My name is Julia Barton with the Organic Farmers Association, and I'm here with my colleague Kelsey Williardson from the Center for Rural Affairs. Bear with me here. Organic Farmers Association provides a national voice for certified organic farmers. It was created by farmers for farmers to provide this strong and unified national voice. And if you are an organic farmer and are not an OFA member, we would welcome you to join us. And we'll have a link for you later in the chat to check it out. In this webinar today, we'll be covering specialty crop insurance, whole farm revenue protection, microfarm, which is a sub-program of whole farm, written agreements, crop insurance during transition, crop insurance while organic. And then we'll talk about some ideas that the Organic Farmers Association farmers have put forth about crop insurance improvement and how to make it work better for all farmers. We'll check out some marker bills about crop insurance that could impact the next farm bill, some ways to get involved, and as we noted, we'll have some time for questions and discussion. We'll ask you to pop those questions in the chat in the meanwhile, because we are expecting a larger group today. Now I'd like to turn it over to my colleague, Kelsey Williardson at Center for Rural Affairs.
Hi, everyone. As Julie said, my name is Kelsey Williardson. I'm a policy associate for the Center for Rural Affairs, and the center, which, Julia, if you want to switch slides, that would be great, has been around for 50 years. We work on establishing strong rural communities, social and economic justice, environmental stewardship, and genuine opportunity for all, while engaging people in the decisions that affect the quality of their lives and the future of their communities. So basically, this means we care a lot about rural people and rural spaces, and we want to make sure that they have the ability to have a say about the issues that impact their lives. And so we work primarily in Iowa, Nebraska, South Dakota, and Minnesota. And then we also do some work in Kansas, but this is where our staff are located. And we're all located in pretty rural areas because those are the areas we care about. And so today I'm going to talk about two things that are true. Crop insurance programs are evolving to bring more operations into the fold, but also that navigating and understanding those options can sometimes be a challenge. And it's not always easy to understand the complexities of crop insurance and how to make it work for you. So hopefully this webinar can assist with that. So I'm going to start off talking about specialty operations. So within the states that the center works in, there are thousands of specialty farms and hundreds of thousands of specialty acres in production. And we want to make sure that those farmers and those operations are receiving protection just as much as conventional commodity farmers. And so obviously with this huge amount, there are no small part of our system, and they deserve that protection as well. And while especially farmers do have quite a few options, today I'm going to speak specifically about individual crop coverage, whole farm protection, and written agreements. So to kind of kick it off, the current levels of coverage available or being used currently for specialty farms is around $18 billion as of 2019, which is great. And it's certainly been growing over the last 15 years, but we want to see that further increase to make sure that protection is equitable. And so kind of the first type of crop insurance one might think of is individual crop insurance. So for specialty crops, that is, there are some barriers to that, as you must have an eligible specialty crop to receive this type of insurance. And so this is the list provided by the USDA's Risk Management Agency of what types of crops are covered. And while this list may seem long and extensive, it is also specific to location. So if you are the only, say, cranberry grower in your area, and no one else is growing it, and it might not be something that's usually grown in your area, you will likely not be able to receive coverage there. Versus, say, if you're growing apples and there are several other orchards around you and it's a common crop, you will likely be able to get coverage. And so it's very dependent on your location, just like you probably won't be able to have coffee trees if you're in a state that doesn't support coffee trees and you're not in a tropical area. So while this list is extensive, keep in mind eligibility is determined by location. And so to find out what's available by your location, you will have to speak to a crop insurance provider. And you'll want to make sure you check that before looking into coverage. And so with this type of coverage, you are able to get what you might consider kind of the typical crop insurance coverage that you might be more familiar with based on how commodity insurers use crop insurance. You're able to get catastrophic risk protection, or CAT coverage. So that's kind of the minimum amount that RMA, the risk management agency, thinks is necessary. It's 50% coverage and essentially used in any type of catastrophic loss. You are also able to use actual production history coverage, yield protection, and revenue protection. And these are also subsidized types of coverage, just like with other larger conventional commodity crops. And so this is more traditional approach. You have one crop and you get an insurance plan for that specific crop. So while this can be good if the coverage is available and you're able to get that protection, if you have multiple crops, this might not be the best option for you. So that kind of leads us into our next section, which is whole farm revenue protection. So whole farm is very new in terms of crop insurance. The pilot program was created in 2014, and this program was really created by farmers to help serve them because it was notable that there wasn't great coverage available for specialty, diversified farms, organic farms. And so this was kind of RMA's first answer to that. So this is the very first program to be available in all states and counties throughout the country, which is a really big deal. As I mentioned before, that individual coverage is based heavily on location. That doesn't matter here. So if you're growing lemons in a hothouse, you can still get coverage versus, if you're in Minnesota, versus that not being available to you at all. And it no longer is dependent on what others are growing around you. And so this is definitely an improvement on that. And it can also cover multiple crops and livestock under a single policy. So if you're a diversified farm and you're growing alfalfa or other small grains and you have grazing cattle or goats, you can have all those things covered under a single policy. And it also takes a more novel approach of insuring based on the entire revenue of your operation, and not on yield history. So if you're growing several types of crops, you don't have to have a super extensive yield history established. Instead, you're going to insure based on your total expected revenue for your farm. And so if you are growing 3 different types of crops and this is about how much those crops bring in each year, that's what you're going to be basing your coverage on. So it's not going to be based on individual yield for those 3 crops, if that makes sense. And it now includes some replant coverage as available. Obviously, is dependent on whether it's an annual type plant and all those other things, but there is some replant coverage available now. And so, as I said, it covers your total revenue that you're expecting. And in crop insurance terms, that would be your allowable revenue. And so that's revenue pertaining specifically to your crop. And so that includes, your planting and your harvesting, but it won't cover the cost if you have to do like a custom hire to do your planting or harvesting. And your post-production revenue is excluded. So that is specific for whole farm. We will get into a different option for that when we speak about microfarm. And there have been some considerable changes in recent years, which has increased the insurable revenue from 8.5 million to 17 million, which obviously is a very large jump. And producers can now report and self-certify their yields at the beginning of the year, helping alleviate some of that red tape. And you no longer have to have the same expense reporting as you did previously. And you can also still get CAT coverage for your individual crops in combination with whole farm. That used to be separate and not allowed if you had whole farm. So that's now just an extra safety net that's permitted. And that's obviously something we want to see. And so as I spoke about before, we're going to talk about whole farm, microfarm. So microfarm is a subprogram of whole farm, and it is very new. Only came out in 2022. And it's designed for operations specifically making less than $350,000 in annual revenue each year. And whole farm requires 5 consecutive years of history to establish that revenue threshold, which is what you'll be insured for. Microfarm only requires 3 years. So this can certainly be an asset and an improvement over that burden of 5 years, which can obviously be quite extensive to have to not have coverage for that entire duration. And you will need to have Schedule F tax forms to show that history. And this also includes all of your agricultural commodities on your farm, so you can, again, insure for multiple products. And you are also able to include revenue from post-production operations. So if you are creating value-added products, say you are an apple grower and you're going to make applesauce out of that, and you're going to get more money from that applesauce, you can then insure for that expected revenue, which is especially great for small farms to be able to protect all of their expected revenue sources and not just their raw commodities. And so with microfarm, our tips are to start early. And if you can, try to find an agent that's familiar with whole farm and microfarm, which may be a little more difficult because microfarm is very new. We suggest talking to your insurance provider, making sure that they're willing to go and do that research, making sure that they're informed on these new options. And you don't have to have an insurance provider that's local. You can go beyond your area and find an agent that might have more experience with those areas or just might be more willing to try them out. And obviously you want to have open communication with your insurance provider and have your paperwork ready. And ask lots of questions. If you're planting new crops, if you're expanding your operation, you want to stay on top of all of those deadlines. And so with microfarm, I would also like to note that while it has a $350,000 cap, there is an opportunity that if you are expecting additional growth, you can insure for that additional growth as long as it's under that 350 cap. So if your farm is growing, say, 10% every year, you will need 5 years of history to provide that rather than the 3 if you're going to insure beyond your expected revenue. As long as you have 5 years to show that each year you've grown 10%, you can insure for that additional revenue. You can also increase your coverage based on your organic certification. So if you've been transitioning and you know that you're going to get certified and that's going to increase your income, you can insure for that expected revenue. Or if you're going to grow your operation, so say you purchased additional acres and you have an idea of how much each acre is going to bring you, you can also insure for that amount as well. And in following years after that first year with microfarm, you can insure for an additional $50,000. So on your second year, you can insure up to $400,000. And so then the last section I'm going to talk about are written agreements. So these are available to anyone. They are kind of a catch-all, so to speak, if you haven't been able to find other more common plans that fit for you. Producers can apply for this individual coverage. So if your individual crop, say, is on that list but isn't available in your area, you can apply for a written agreement to get that insured, but it will require quite a bit of additional effort, both on your part and your insurance agent's part, because you will need to have quite a bit of supporting documentation, details of coverage in, maybe neighboring areas. Say no one else is growing this product in your county, but they are in the county next to you. You can provide that, and that will be very helpful in getting coverage. But you will also require letters of support, production history. You'll likely need an agronomist's approval, and note that you are able to grow those things there. So keep in mind that there is a bit more of a lift when it comes to written agreements, but it is a way to get protection where you might not otherwise have it. And so, as I mentioned, there's a lot of paperwork involved. You need at least 3 years of crop history on your requested crop or a similar crop. And you're going to have descriptions of your land, locations of where you're going to plant it, and your letter of adaptability from an ag expert or agronomist. And you're going to need to provide these with plenty of time to your agent, so that way the inspections and approval can be made. So you will need to plan additional time beyond just your final crop insurance deadlines. So do keep that in mind. And that is what I have so far for specialty crops. And I'm going to hand it over to Julia, who's going to talk about organic coverage.
Thank you, Kelsey, and thanks everybody for popping your questions in the chat. We will get to them just a little bit later here. I'm going to run through a couple of pieces here related to organic transition, a specific program related to organic transition and certified organic growers, and then some thoughts about organic crop insurance. So I'll be really frank and note that the current path for crop insurance in transition can be a little bit murky. Sometimes agents on the ground are undereducated about options during transition. So a good strategy is to be in close communication with your agent about being in transition, and then making sure to fill out an organic system plan in your first year of transition, which seems a little bit crazy because you might not fully know what your organic system plan is or what you want it to be in your first year of transition, but it is a living document. And looking on the upside, it does give you an opportunity to build a relationship with the certifier, which is a good transitional strategy anyway. And it is now required. So guess what? If you want crop insurance and you're in transition, you have to do it. We are here to help you with that initial transition plan and would be happy to do so if you're in any kind of situation where you've never done that before or have some questions. Our farmer services team would be happy to assist you there. Different farmers use different strategies in transition. Some folks grow very small acreages of multiple crops to build up an actual production history. That's an interesting strategy. Some folks bypass transitional crop insurance altogether by transitioning in hay or pasture or cover crops. Maybe they partner with the Natural Resource Conservation Service and get some funding for cover crops during transition if they can swing that on some acreages. So there are a number of different strategies that folks use. The Organic Transition Initiative is a big investment in organic transition that's happening nationally right now, and the Transition and Organic Grower Assistance Program is the risk management agency's piece of that Organic Transition Initiative. So this program is as follows. It offers premium assistance for covered row crops. There is no enrollment paperwork. You can see the sales closing dates here. The way it works is that folks are given 10 percentage points of premium subsidy for transitional crops, $5 of premium assistance per insured acre for organic grain and feed crops, and then 10 percentage points of premium subsidy for all whole farm revenue protection policies. And those points also apply to additional individual crop insurance policies if folks are holding those as well. In terms of crop insurance while organic, progress is being made and there's still a lot of work to do. So a good piece of news that happened just a couple weeks ago here was that now USDA conservation practices that folks are engaging in with the Natural Resource Conservation Service are also considered good farming practices for the purposes of the Risk Management Agency. So that's good. That's progress. Two agencies under USDA working together to have the same definition of something. We also have had some progress over the last couple of farm bills. Contract price addendums. I think those were 2 farm bills ago that those came about and then were enacted over time. Basically, you can insure to a contract price using a contract price addendum. And you're going to want to be in touch with your agent by the acreage reporting date for that particular crop. Organic price elections are also being developed and we'll need more of those over time as well. Those use organic prices for certain crops to determine policy premiums and indemnity. And then Kelsey touched on written agreements, which are used for crops not covered by other products, which are negotiated individually. And I saw the question about like, what's an example of some crops that would be under a written agreement? And Kelsey would probably have several. I know one that's really common in the region where I live is sunflowers. So folks want to grow sunflowers as part of their grain rotation. Those aren't covered under the typical crop insurance policies. So some folks have gotten written agreements for sunflower coverage. It's very exciting to work with farmers who have a lot of ideas about how to improve things. And the OFA farmers have a number of policy positions on crop insurance that exist currently. And we will be workshopping those positions as a part of our crop insurance working group and be in close touch with RMA and decision makers to try to help crop insurance continue to improve and work better for organic transitioning farmers and farmers who it's not currently serving super well. So I wanted to highlight some of those positions just to get your ideas flowing if they're not already, and we'd welcome your input on these as well. One is that the development of new crop insurance tools are needed that would serve the needs of diversified organic growers, serving all types of markets, including direct sales, that have a streamlined application process and prioritize low paperwork burden. That does sound good, doesn't it? So that's one, I think folks were building off of whole farm here, but upping the ante a little bit in terms of low paperwork burden and a streamlined application process. And we want to acknowledge the importance of whole farm, being that it came from the sustainable agriculture community and was championed by groups like the National Sustainable Agriculture Coalition and others, which are sort of sister organizations of ours. So I want to acknowledge that and also acknowledge that we can keep working on it and making it better. We also want to allow organic transition producers and beginning farmers to calculate the actual production history yield for new acres or acres under organic transition using the APH of other organic acres on their farm, rather than defaulting to the county T yield. So something that's really interesting about organic crop insurance and transitional crop insurance is that beginning farmers are facing many of the same challenges that organic and transitional producers are facing because they're engaging in something new. And so the RMA treats all 3 of those groups, beginning, transitional, and new organic farmers very similarly, and the barriers are very similar. So too might the solutions be. Also want to note that organic farmers are required to have a crop rotation. It's in the rule, it's in the regs, and that's not currently well supported by crop insurance. So we need crop insurance coverage that's not just in the form of written agreements for crops besides corn, beans, wheat, and rice. And we need a way for organic farmers to be supported rather than penalized as they are currently through the APH system, which would support that inaction of robust and extended rotation, both during transition and for organic producers ongoing. And then finally, these are just a smattering of the ideas that the OFA farmers have shared, but farmers need a way to manage risk due to genetic and pesticide drift contamination. These situations could be recognized as a qualifying event for crop insurance, which would be great because then farmers that are suffering from a loss would not be required to identify a source, which is often not possible given volatile compounds. So more support from USDA is needed to protect farmers from these types of contamination and to deter the practice of drift. So those are some of the ideas that the farmers in the OFA network have put forth. Other folks are also sharing ideas through a different venue, which is part of the Farm Bill creation process. So leading up to the Farm Bill, things called marker bills are shared, which are just basically an idea, a way of floating ideas with one's colleagues, sort of be those, lawmakers or different groups, stakeholder groups, to see what has traction and what ideas might have enough traction to be put in the omnibus legislation of the Farm Bill. So we are watching several of those, and my colleague Madison is popping our Farm Bill tracker in the chat so that you all can check these out in more detail later. But I wanted to highlight 6 of them that have to do with crop insurance. So one of them is the Whole Farm Revenue Protection Program Improvement Act of 2023, which is intended to take what we think is a good program, has really good bones, and make it better, make it work better for farmers. So dealing with some of the challenges that were noted by the OFA farmers just a couple slides ago. There's also the Farm Program Integrity Act of 2023, which is intended to close some loopholes in the farm payment systems to ensure that those of us, all of us who are paying for crop insurance, all the taxpayers, are supporting those who are truly actively engaged in farming. And then also to put a cap of $250,000 annually in total commodity support per farm. Because at this point, there are some folks who are maybe not, some folks who are maybe double dipping, paper farming, and also maybe some folks who are not actively engaged in farming who are benefiting from crop insurance. There's also another marker bill called the Ensuring Fairness for Family Farmers Act of 2023. That spelling is intentional, which is to reform the current crop insurance policies to incentivize agents to provide coverage to small and diversified producers. So Kelsey noted that it may take some more work and some more additional knowledge to do some of these outside the box, but it's not even really outside the box, but not the typical crop insurance type producer coverage. And so there's folks that are kind of thinking about paying the agents differently in order to incentivize that. Pardon me, pardon the beep. There's also the Crop Insurance for Future Farmers Act of 2023, which is intended to do an alignment of the term beginning farmer across USDA programs. So we talked earlier about how the good farming practices term was just recently aligned between NRCS and RMA. This would make the definition of a beginning farmer consistent, which would allow insurance protections for beginning farmers up to the first 10 years of farming. There's also the Weather Act of 2023, which is a creative idea to create multi-peril weather index-based insurance that would be kind of quick and responsive to extreme weather events. So payout would happen within 30 days of an extreme weather event based on these various weather indices that would be utilized to determine it per county. And then final marker bill I will mention today is the Dairy Act of 2023. And I want to note that OFA folks had a lot of engagement in the coalition that led to the development of this act, and we're very excited about it. It is intended to provide support for organic dairy producers through improved data collection, support to help with dramatically increased input costs in the dairy sector, and then key investments in infrastructure. So those are some marker bills to watch. Please do check out that tracker on our website. And then please also consider engaging with us in a working group setting to brainstorm, hone the existing positions, develop new positions and ideas and solutions to the challenges that we're facing with crop insurance, and then also to provide positive feedback about the things that are working well for organic transitioning and sustainable producers. So we meet every third Wednesday, November through April. We have a meeting on Wednesday, December 20th at noon Central. You are invited. Please email me if you would like to receive the Zoom link, and I will make sure you get a hold of it. Also wanted to note that we have another exciting opportunity to get in touch with other farmers through our farmer circles. Our first farmer circle is starting tomorrow. It's the collective farmer circle, so anybody is welcome. And then we also have several affinity groups that will be meeting regularly. A Black farmer circle, Indigenous, Latino, Latina, Asian, and queer farmer circles will meet online monthly to network, discuss ideas, challenges, and to support one another. And finally, I'll invite you to become an OFA member if you are not already. We would welcome your ideas and your input and your energy. And then I will also pass it over to Kelsey for some more engagement opportunities.
Yeah, so on our side with the Center for Rural Affairs, we'll be hosting some discussion groups with specialty producers and organic producers. The specialty producer discussion will happen January 31st at 5:30 p.m. and our organic producer discussion group will happen February 1st at 5:30 p.m. So both of these will include a short bit of education, and then it will be some peer-to-peer support, discussing what crop insurance experiences have been like for you, getting some advice from other producers who may have more experience in that area, and really wanting to kind of hone in on some of that, peer experience that's really hard to replace and connect producers with each other. And if you're interested in either of those, I encourage you to please email me and I will send you a link to our Zoom scheduled discussions. And yeah, I would really love to see you guys there.
Thank you. And thanks for joining us today. I'm going to stop share so that we can have some discussion. And I'm wondering, Kelsey, if you saw some items in the chat that we could start with for Q&A, or if you even wanted to build on other examples of other crops covered through written agreements, that might be a good one.
Sure. So in our presentation, which we did go a little bit fast, so I do want to just kind of maybe revisit a few points really quickly. For whole farm revenue protection, just to clarify that you do need 5 consecutive years of that Schedule F tax history to get whole farm protection. But there is an exception for beginning farmers, and as Julia mentioned, that definition varies. So for RMA's uses, it's a farmer who has farmed for under 10 years. So if you have farmed less than 10 years, you only need 3 years of history in order to receive whole farm. If you've farmed longer than 10 years, you'll need 5 years of history. And just to clarify, that whole farm protection is available between 50 and 75% if you're insuring 1 to 2 commodities at a time. If you're insuring 3 or more commodities, then you can increase that up to 80 to 85% coverage. So it depends on the amount you have. And then if you have 3 or more commodities, you also receive additional discounts on your premium, because this really is kind of trying to encourage that diversified operation. And the only things that aren't covered under whole farm are timber, forest products, and animals for sport, show, or pets. So any pet that you don't deem as livestock is of course not covered. And then those forest products. So just wanted to clarify a few of those things before we jump back in. And there were a few questions added to the chat, and I would love to certainly answer some of those.
I'll pull one right now, and then if you want to look for the next one, Kelsey, how's that sound?
Perfect.
So I see one here from the Rodale Institute. I'm not sure who's with us from Rodale today, but hello. And there seems to, hey, good to see ya. There seems to be a question about adding organic and transitional insurance to an existing conventional crop insurance plan. Yes. So, and how that works. And there's another question about, is there any benefit to putting organic acres into an LLC? So that is another strategy that I didn't mention on that slide that people do engage in, is they separate out their acres into different forms of incorporation in order to handle crop insurance separately for different crops. I don't think that's the way it's intended to work, but it is a strategy that folks have used because the existing crop insurance system is not really designed for transitional, organic, and conventional acres. As we know, many farms run all three, right? So some folks have done that, and they have all their organic stuff in one LLC, all their transitional stuff in one LLC, and all their conventional stuff in one LLC, and then insure the three LLCs separately. I don't think RMA intends for it to work that way. And I think sometimes they don't actually even know that it is working that way. But it is something that different growers have utilized. There's an idea floating around that has a lot of legs called enterprise units by practice type. And the idea, I know that sounds really wonky, like really, could we come up with a better name? But the idea of enterprise units by practice types is to do those buckets without needing three different sets of incorporation. So I'm going to insure my transitional stuff together, my organic stuff together, and my conventional stuff together. It's all under one business. And but it's insured accordingly. And that is an idea that I know the center has worked on also, Kelsey, and I know a lot of other folks are really interested in that strategy moving forward. As far as like how it actually works to add organic and transitional insurance to an existing conventional plan, it's like being in close conversation with that agent, explaining I have this many acres of this that is in transition, having an OSP for those transitional acres, again, which like in year 0 of transition or year 1 of transition is hard to do. But Rodale, or feel free to say, Sam, Rodale also has folks on the ground providing technical assistance and able to help folks with those, hurdles, as do we. So I think it's doable. It's just being planful and really communicative. And then, these strategies that farmers have adopted over time are there for a reason. So I think it's also good to explore them.
Gotcha. Thank you so much. Very helpful.
Good to see you. All right, over to you, Kelsey, if you have another one picked out.
So in the chat, looks like John asked if cover crops that will ultimately be killed by herbicide, if they're lost prior to planting. So cover crops typically aren't covered in your crop insurance because you aren't harvesting them for sale. So especially if you're going to be killing them by herbicide, some people may grow cover crops and then be able to use them for seed, which if you do that, and if you're wanting to get coverage for what you're using as a cover crop, and it's something you can harvest, say for seed crop or even as a feed crop for livestock, you would instead want to use a double cropping approach, which does offer some coverage. Typically, though, it does have to be with soybeans in most areas, but there is some coverage for double cropping if you're planning on harvesting both of those. Typically, if you're growing a cover crop simply for the environmental benefits, you can't usually get insurance on that seed because it's not intended for harvest. I hope that answered that question. If not, feel free to jump in and ask anything further. And then while I'm talking, I'm going to go ahead and put the link. Someone also asked if there was a list for brokers that they could talk to for crop insurance. I'm just going to put the link to the RMA's agent locator tool in here. So as the center, that's the best that we can offer. We can't advocate for any individual crop insurance agent, but this is when I definitely recommend talking to your peers and see who has worked well for them, or with organizations like OFA who do have other sources if you want more personal recommendations.
Yeah, and as a rule, if you're running into a jam, please get in touch with us because we want to be supportive and be helpful and see what we can do to try to work it out. So, and maybe that means finding an agent that really gets you, but maybe that means setting up some meetings to try to grease the wheels to get some answers about something that doesn't make a ton of sense. I'm seeing a question here that I'm wondering if you know the answer to, Kelsey. I think I have an idea, but it's, what is the criteria? This is from Larry Hewitt. What is the criteria for a crop to be on the insurable crops list? For example, why are onions insurable but garlic isn't? And I think you're referring to the specialty crop list there.
So that is kind of one of the mysteries of RMA. And it really has to do with production and the area where sales are happening. They have a more specific methodology, I suppose you could say, that is maybe a little under wraps for most. I would, it's hard to say without knowing individually, but they do not, yes, because they do not offer coverage for all specialty products and they do not offer it in all areas. But even though it's not offered under that individual coverage, you are still able to use whole farm on a product like that. You are still able to pursue a written agreement if needed for that. It's just not one that's available widely for individual coverage. And, it's kind of one of those great mysteries of crop insurance as to why would one product be covered when another isn't, especially when they're closely related products. And sometimes when you have products that are that closely related, it can be easier to get a written agreement because you're able to say, they have similar growing conditions, that it would be easier to get that added on. But it is definitely one of the frustrations of crop insurance, certainly, that, you can insure one thing that's very similar and not another in one area. So,
Well, and Larry, great point on the two alliums there. We have heard from RMA that if, and this is not specific to specialty crop, but just more generally, that if something is not insurable in a particular area, having a critical mass of written agreements for that crop is a thing that could tip it into kind of awareness for RMA to get it on a list for potential insurance. However, written agreements can be cumbersome, as Kelsey noted earlier, and so that may not be the best solution, but that is something that we've heard from RMA.
I would definitely recommend, if there's demand for it, be loud. Participate in groups like this. Make sure that you're bugging people as much as you can to tell them, hey, there are farmers in this area growing this product and we want protection for our products. Yeah, just like she said, usually if you have multiple people saying the same thing, that's really going to push the needle. And so even if you're a small group, I would say be loud and, insist on that for yourself.
Thank you.
Thank you. Kelsey, I see one here from Vinny Mendoza that notes, tell me, Vinny, you're interested in having some greenhouse production in addition to some value-added production covered that you currently have? Is that the summary?
the problem is that I have a, let's say, 10,000 square feet of production of moringa. I don't know if you're familiar with moringa. We call it miracle tree. And I had it for over 7 years now. I've been asking the FSA to provide me with crop insurance, but now I'm in the process of going the next step. I'm going to produce energy drinks with the moringa, so I'm going to triple the production. And I'm afraid that I don't have crop insurance for the trees, and I keep on asking them. This year I've gone there twice and they just ignore me. So I'm trying to find a way to get crop insurance for the moringa trees.
Where have you gone?
To the Farm Services Agency, FSA.
Okay. So Kelsey, you might have some ideas about the tripling of production. Could that be covered under microfarm?
It could if you're under that income,
Yes.
then you could apply for microfarm. In this case, if you have a contract, say from a buyer that is saying we want to purchase this from you to create this energy drink, I would highly encourage, this isn't something we talked about today, but contract price options or contract price addendums, where if you have a written contract from someone and they are saying this is how much we're going to pay you, you can get protection based on that contract. And that can be very beneficial, especially if you are working with a specialty product that isn't going to have that individual coverage.
Yes, I'm in the process of working that with Whole Foods. They're interested in buying my product.
So if you have that contract available, I would highly suggest using that as your basis, because that would be your like guaranteed revenue. And that would probably be your best option for ensuring for the most protection. Because even if you're going from the other ones, if you're increasing by that much, you might not be able to fully insure for that significant of an increase within 1 year. But if you have a contract for that, I would highly recommend looking into that as an option, because I think with that big of a growth over such a short period, that would probably be your best option.
Okay. Awesome.
Yeah, and the other trick, and this gets confusing, a lot of people talk to FSA about crop insurance, but your main contact for crop insurance would be the risk management agency, which is going to be different than the FSA. So that may be a reason you're not getting your needs met over there. Might be the wrong shop. So,
So who do I need to contact? And
the risk management would be a good one to start with, and then there's a link of some agents to connect you to an agent if you'd like, that Kelsey put in a little bit earlier, or if you run into a jam, you can give me a ring and we can troubleshoot.
Okay, great. Thank you.
Sorry, go ahead. Okay, super. I saw another one here, a question from Sheila. Organic corn testing over 5 parts per million for vomitoxin cannot be sold as organic and has to be sold as conventional. What kind of protection is available for the loss in this price difference? I do not know. Do you know, Kelsey?
This one's hard. So there is, with organic, if you are insured for organic under their organic special price options, you should be able to insure for that price loss for that year. But if that impacts your certification for following years, I am not sure if that protection will continue.
It shouldn't impact certification.
Okay. So I would say typically you do have to be very, like, obviously it depends on which method of crop insurance you have. But if you are insured as certified organic and you lose revenue, so if you're using a revenue option, whether that's whole farm revenue or a corn specific policy with revenue protection, Where if you're insured for yield protection, this likely wouldn't be covered because your yield wasn't impacted. But if you're insured for revenue and it impacts your revenue, it should be covered. I hope that makes sense.
Thank you, Kelsey. And my colleague Harriet Bihar noted in the chat also that if folks insured the corn with vomitoxin under whole farm, that loss of income should also be covered.
Yes.
So there are different ways to address it through different combinations of plans and some opportunities there. We had a really good question here from Mark Newman. Mark, I have not read the article, so I don't feel like I'm able to comment at this time, but would love to dig into that and get back with you. So that would be exciting. Does anybody have any final questions for the group? No? Don't be shy. Okay, hearing none, I will just reiterate that we'd love to workshop ideas with you in community as a part of the crop insurance working group. I know Kelsey would love to have participants in discussion groups that she's hosting. We have some good opportunities within crop insurance. We also are facing a changing climate. And so we need to make sure that there's crop insurance that works for everyone. So we'd welcome putting our heads together on those ideas and potential solutions to try to improve what we have and maybe think up some new opportunities moving forward. So appreciate your time and attention. Thank you for joining us. And we'll be sure to get you a recording to everybody who registered later this week. Thanks again.
Thank you, everyone.
Thank you.